News Talk 94.5 WPTI, 96.7 FM WTOB. And you're listening to the Wealth Guardian Show with Doug Ray, helping you to retire that job but keep the paycheck. With me today is Brice Payne, and this morning we are preparing for market volatility in 2023. Good morning, Brice.
Good morning, Doug. Happy holidays to you.
And you too. Boy, I tell you what, the year is coming to an end, and 23 is coming close.
It's been a fun year, 2022 has, as far as the markets
Interesting
go.
Year.
Interesting year, and of course, like we always do this time of year, let's segue into football just for a moment.
Just a moment. Yeah, just a moment.
Interesting year there as well for football, and it occurred to me last night, sometimes I wake up, Doug, at all hours of the night or morning, and something occurs to me, and I should have a pen and write some stuff down. And somehow, by a miracle, I remembered this. So I thought, our football teams here at the Wealth Guardians are the Broncos, the Packers, and the Panthers. And I thought, what if the Broncos, the Packers, and the Panthers were a retirement plan? What part of the retirement plan would they be? And the Broncos, who all but one of their games have been decided by one score or less. Yeah. They've lost by one score or less. The Broncos would be a CD. You're scoring some interest there, but you're not even keeping up with inflation. That's the Broncos. The Packers would be cryptocurrency. High expectations, sometimes rocking really strong, but then wildly unpredictable and then failing in the end. And the Panthers would be a subpar mutual fund, maybe one of those bottom of the barrel in their Morningstar rankings mutual funds that you kind of have high hopes for, but then nothing ever materializes really of significance out of them. That's our football teams.
Well, I tell you, that's a great analogy. I was going to put them in skilled nursing care.
All three of them. Yeah. If you've got what would have been a great quarterback, and maybe in his day, Russell Wilson, or who did the Panthers just unload?
Oh, Mayfield.
Yeah. And then of course you've got Aaron Rodgers, so maybe you can squeeze another year out of him. But yeah, it's the retirement home might be a good place for them all.
Yeah.
But, Doug, we've got a great show here preparing for market volatility in 2023. But why don't you go ahead and lead us off with our Wealth Guardian Service salute?
Absolutely. We always try to give a salute out there to our active duty service members, active duty first responders, even our veterans and veteran first responders. Thank you for your service. Thank you for your sacrifice. And families of all, thank you, because without you, they couldn't do their job. So thank you very much.
Yeah, it's a tough time of year to be away from your family if you are deployed out there. So again, Wealth Guardians give you that service salute. Doug, thank you for your service. Garrett's out there. Garrett, thank you for your service as well. All right, Doug, let's go ahead and get into the meat and potatoes, as we say here. Preparing for market volatility in 2023. As we said, it was a wild, volatile year in 2022. A lot of our clients have asked us, what do we think is going to happen for 2023? So, of course, we don't know.
We don't know.
But we've got some historical data to go by. You're one of those chart analysts. You watch the charts and analyze them all the time. So we're going to talk about that. But market volatility kind of became the norm in 2022, and the question would be, are we in for more of that same in 2023? And that's what we're going to talk about, the market outlook for the next 12 or 13 months. Plus, we're going to share some tips on how you can best prepare for potential future volatility, especially if you're getting close to retirement and you don't like volatility anymore. So the first thing we'll start off with here, Doug, is let's go through a few predictions and comments and thoughts from the quote-unquote experts out there. So mergers and acquisitions says signs point to more market volatility in 2023. Okay. Bloomberg tracks the forecast of many market handicappers and reveals the average forecast of the S&P 500, and they predict a decline for 2023. So I guess that's meaning, if I read that right, Doug, does that mean that we're going to end 2023 lower than what we start out in 2023?
Well, maybe not. I mean, the decline in 23 could be part of the year.
Or the whole year.
Or the whole year.
Okay. Gosh, I hope it's not the whole year. Okay.
I don't think it's going to be. I'll give you my
We're going to
prognostication in a moment.
Very good. The prognosticator of all prognosticators right here in the Wealth Guardian studio with us this morning. It's the first time the aggregate prediction has been negative since 1999. So talking about that Bloomberg tracking there. Morgan Stanley's Mike Wilson says the markets in 2023 will face extreme volatility. And he relates the market struggles to a 1940s style boom bust inflation style. So that's scary.
Yeah.
Because usually we can go back to 2008 and see everything that we need to see.
Yeah.
But this is Morgan Stanley's Mike Wilson is taking us back to the 1940s style inflation cycle. So that's scary. JP Morgan strategists think that stocks will slump for the first half of 2023. The quote is here, fundamentals will likely deteriorate as financial conditions continue to tighten and monetary policy turns even more restrictive. Now, if you are just tuning in, you're listening to the Wealth Guardians, and we're talking about preparing for market volatility in 2023. And Doug, we just went over mergers and acquisitions, Bloomberg, Morgan Stanley, JP Morgan, some of their experts on what they think the markets are going to look like in 2023. But you have been following the markets and doing trading on your own for well over 30, 40 years. So tell us what your thoughts are.
Not 40 yet, but...
You haven't been trading for 40 years?
I'm in my 35th year in this business.
Well, but you were trading before that.
Sure. But
okay.
I'm still not sure it's 40 years. Anyway,
okay.
Look.
Sorry about that.
Here's the thing I've learned in that 35 years. When the bet is all on one side, it's more profitable to trade the other side of the bet.
Yes.
Yes.
So
having said that, what I just heard from you was all these people are somewhat pessimistic. I, too, am pessimistic about 23. We've been in a bear market this entire year of 22, just about.
Yes.
Started in January for the big indices, started in November of last year for the NAS and the Russell.
Right.
October, we had a rip-your-face-off rally. And I think that was spearheaded a lot by the powers that be, the Fed and those folks. They can do that. They have the ability. This was an election year. So they didn't just put lipstick on the pig. They put big old bushy eyebrows on it too. But that's not unheard of in a bear market. We can have really big, called bear market rallies. Makes everybody feel comfortable again. Like it's over. It's time for the bull market.
We've already hit the bottom. Yeah.
Here is what concerns me. We still have inflation. We still have the Fed on a interest rate increasing agenda.
Janet Yellen's already said more or less that they are going to do some more rate hikes.
And they said, Jerome Powell said this, he said it's going to be more extended and it's going to go higher than you may have expected.
Wow. And that always has a negative impact on the markets.
That always has a negative effect on the market, especially the small companies. It's just simple, folks.
Yes.
Think about this. They're having to borrow money at higher rates. No different than you folks out there in the mortgage market. Mortgages have gone from 3% up to 7%.
Or used cars.
Exactly, same thing.
New cars, used cars, yeah.
So I do think 23 is going to be volatile. What's interesting to note, and I've said this many times on this show, I'm a technician. I look at charts, which is basically the past performance of stocks and also the market itself, and you chart the performance and you can see a pattern. And if you took the market today and overlaid it on that 2007 and 8 market, it's almost identical. And we are at the point where we are starting that downside move that 08 had into 09. If this charting actually plays out the way it did back then. And it does, folks. If you look at history, Mark Twain said, history may not repeat itself, but it sure does rhyme. Oh, boy, does it rhyme in stock market. Okay. It's a cyclical effect, and it happens over and over again. So, yeah, I expect much more volatility ahead in 23, but there is going to be a silver lining to the cloud. Okay. I am a short-term pessimist. Always been a long-term optimist.
Okay, very good. I came into your office this morning and I said, Doug, am I correct in understanding that the market has already rebounded around 20% from its low? And you said, yeah, that sounds about right. And I asked you, I said, did we have that kind of rebound in the 2008 financial crisis? And you said, oh, yeah, absolutely. Mm-hmm. And that's when you talked to me about overlaying the two charts, the technical chart from now and versus the technical chart from then, and how similar they were. And you pointed out to me where we are now, and if it is going to continue mirroring what happened in 2008, then we are on the precipice of a larger decline than what we've already had. So that is concerning, particularly if you are approaching retirement and you don't like volatility anymore. You're trying to preserve that nest egg. Well, if you want to have a further conversation with a fiduciary, a financial planner, a retirement income certified professional, you can give us a call here at the Wealth Guardians. Our phone number is 336-391-3409. That's 336-391-3409. There's no cost or obligation to sit down with Doug, Garrett, and myself and see how we can help you better prepare your portfolio for retirement. Now, we're almost out of time for this segment, but we're going to be talking more about this going into the second segment, so stick around. And of course, it's trivia question time. Now, Doug, this trivia question here, I don't necessarily expect you to get, but I think it's a great topic for this time of the season. And I'm kind of not a history buff, but I love history. So here's the question. How was it decided that December 25th would be the date to celebrate the birth of Jesus? There's three theories to that. So there's no one correct answer, but there's three theories on how that was decided. I'm just looking for you to get one of those. Okay. All right.
Good luck.
Very good. Okay, stick around for the answer to that trivia question on the other side of this short break. This is Brice Payne. With me is Doug Ray. The show is the Wealth Guardians, helping you retire the job and keep the paycheck. And this is News Talk 94.5 WPTI. And this is 96.7 FM WTOB. News Talk 94.5 WPTI. 96.7 FM WTOB. You're listening to the Wealth Guardian Show with Doug Ray, helping you retire the job and keep the paycheck. I'm Brice Payne along with Doug Ray, and in this second segment this morning, we are talking about how to prepare for market volatility in 2023. Now, before we get to our trivia question, I've got two questions for you. Are you looking forward to your retirement? Okay. Do you want to make sure that you are making the best financial decisions for your retirement? Well, if you answered yes to those questions, then I have great news for you. We here at the Wealth Guardians offer a no-cost, no-obligation second opinion/review of your retirement plan, including a deep analysis of your assets, investment portfolio, insurance policies, income needs, risk tolerance, risk exposure, tax mitigation strategies, legacy goals, and the fees you are currently paying. Our goal is simple. We want to help you lower your fees, align your risk, and improve your overall retirement picture so you can retire the job and keep the paycheck. But the ball is in your court. You have to give us a call. Our number is 336-391-3409. Same number week in and week out, 336-391-3409. Give us a call or visit us at thewealthguardians.com to set up your financial plan review with Doug, Garrett, and myself today. Remember, the markets aren't going to wait for you. Okay, let's go ahead and get to that trivia question. Doug, I'm asking this question more as one who's interested in history, not fully expecting anyone to get this, but if you do get one of the answers, that's great. How was it decided that December 25th would be the date to celebrate the birth of Jesus? And there's three theories or historical clues to this.
Yeah. Seems like I have heard this in the past. I'm going to give this a scientific while, leave out the explicative guess.
Okay.
All right. I think one of the theories is because of the star over Bethlehem, they did some kind of an astrological scientific thing where they came up with the fact that back at that time should have been around December 25th.
Well, that's a great guess, and actually that leads to, if they take that approach, that actually leads to the spring, which is when historians actually believe that Jesus was likely born. So you are right in that aspect. But how was December 25th actually determined? So there are three possible origins to this December date. So the Roman Christian historian Sextus Julius Africanus dated Jesus' conception to March 25th, the same date upon which he held that the world was created in the spring equinox time, which after 9 months of being in his mother's womb would be December 25th. Mm-hmm. So that is one theory of how it got started. The other is in the 3rd century, the Roman Empire, which at that time had not adopted Christianity, celebrated the rebirth of the unconquered sun, which the name was Sol Invictus, on December 25th. So this holiday not only marked the return of longer days after the winter solstice, but also followed the popular Roman festival called the Saturnalia. All right, so that's another one. So when Rome converted to Christianity, they wanted to use a date that was already a celebrated date. And then the third theory is the church in Rome began formally celebrating Christmas on December 25th in the year 336 during the reign of Emperor Constantine. As Constantine has made Christianity the effective religion of the empire, some have speculated that choosing the state had the political motive of weakening the established pagan celebrations. So this one follows very similarly to the second one. The date was not widely accepted in the Eastern Empire, where January 6th had been favored for another half century. And Christmas did not become a major Christian festival until the 9th century. But so there's your three answers.
That's good. Yeah,
I like it just because I love, particularly for some reason, Christmas history and how all of these traditions of the Christmas tree or the mistletoe and all of that stuff got started.
Now here's a little bit of trivia for you.
Very good.
That relates to our clients. We have 2 clients out of 400 and some odd households that were born on Christmas Day.
Okay.
One in the Charlotte market and one up here in the Triad.
Okay.
We have over a handful that were born on Christmas Eve, including moi.
Including yours truly. Doug right here's birthday is December 24th.
Right.
So you got all of those, the clients and the couple that you mentioned on December 24th, kind of got ripped off out of a whole bunch of birthday gifts over the years, didn't you?
That's interesting.
All right, well, let's go ahead and get started with the second segment here. And we're talking about preparing for market volatility in 2023. Now, we went over some quotes in the first segment, and we're going to start off here with my asking you, Doug, when the market is experiencing a lot of volatility, like we have been in 2022, do we get a lot of calls from concerned clients?
Very good question. Let me take that question and let's go back 30 some odd years when I was actually a stockbroker.
Okay.
Oh boy, did we get calls. And I hated those calls. Nobody likes to lose money for your client. But back in the day, it was inevitable because we didn't have any downside control. Today, we do. Went through the 2008 downturn and virtually had no calls at all because people knew they were protected on the downside. I'll never forget you coming in, joining the firm, and you came to our first Christmas party. All the clients were there. We had been through a pretty rough stretch at that point. Wasn't
December. It was the worst December in a long, long while.
Yep.
Because December always tends to rally.
And you made the comment that, everybody in here is happy. They're not afraid. They're not upset. They're not scared.
We had about 150, 200 clients in the room with us doing our annual holiday dinner.
Yeah.
And I thought, gosh, this is going to be really a stressful time for an advisor to suddenly be surrounded by all of his clients. And
so, and it was great. The lesson I learned from 30 some odd years ago is you got to protect their downside. We have those in place now. And if you're going to work with seniors and people who are in retirement or about to join retirement, you really have to protect their downside.
Well, they're moving from the wealth accumulation phase of life to the wealth preservation stage of life. It's a whole different ballgame.
It is.
Investing at that. So if you're 30 years old or maybe even 40 years old, you've got 20, 30 years ahead of you before you're going to be using your retirement assets.
Yep.
Probably volatility like what we're experiencing today. Well, it's not fun, but it doesn't affect your day-to-day life.
Yeah. And here's the big thing to remember. People that we're working with now, their money's protected. It's essentially in cash. It's in dry powder. There will be a bright day in the future. We're going to have another bull market after this bear market's over. Cycles repeat themselves. they'll be fully positioned to take advantage of that coming bull market.
We've got, about 400 clients or so, and I would say over the course of 2022, I think I'm stretching it if I say I've even heard from 8 of them about how concerned they are, and do we need to do anything different? Is their portfolio okay? The other 390 some, they watch their accounts and they realize that they are in a proper portfolio for a time like this based on their risk tolerance.
Exactly.
Right. Doug, we've kind of talked about this. We'll skip on to the next one. If you're already retired or retiring soon, is it okay to have some volatility in your portfolio, or does it need to be avoided altogether at that stage of your life?
Well, you can't just have no volatility if you want growth in the future. You got to have some volatility in there, but you have to be able to. Again, I go back to protecting that downside in these turbulent times. In a normal bull market, we're going to have a 10% correction every once in a while. That's quite normal, and you can weather that. My concern is, losing 30, 40, 50 plus % of your portfolio. That you want to stay away from. And there's ways to do that. You might want to come in and talk to us and see how we're doing that for our clients.
That's absolutely right. So going back to what we just said, how many clients we've had call us and being concerned about how their portfolio weathered the storm so far, what we've had of the storm so far in 2022. If you think to yourself, well, gosh, you know what? I called my advisor, or I'm afraid to even log into my accounts to see what my advisor, how much I've lost at this point. If you have suffered more losses than what you feel comfortable with here in 2022, and again, we're thinking that a lot of the experts agree that the market's just going to be more volatile in 2023, and you want to have a second opinion of your portfolio, and you're starting to get an understanding of, gosh, the way Doug and Brice are talking, maybe my portfolio isn't aligned to my risk tolerance or where I should be at this stage of the game, then by all means, give us a call. Our phone number is 336-391-3409. That's 336-391-3409. You can also visit us at thewealthguardians.com. We don't charge anything for sitting down with you and going through a planning process to see how we can better align your portfolio to meet your goals and objectives. But you do got to call us. All right, Doug, let's tackle one more here. Give an example of a time when you saw someone get severely damaged by market volatility because they didn't have a well-constructed retirement plan.
Well, I've seen that more than once. Yeah, I mean, all I have to do is think back to 2007, 8, and 9. 2 occasions. Now, I've talked about this on the radio before. One lady came in with a variable annuity that lost more than half of her actual money. And she was looking at what was they called the income account because it had a guaranteed growth rate of 6%. Mm-hmm. Well, she thought after the variable annuity had run out of its surrender period, she'd be able to cash that out. When I had to tell her the ugly truth about it, I said, no, you're going to cash out what this number here is, the equity number is. Well, she started bawling.
Variable annuities.
I mean, she literally started crying in my office.
They are a tricky deal.
The other one was, I remember distinctly, this fella came in to see me. He was on the verge of retirement, and he had his money managed with a national advisor who advertises all the time. I am not going to say his name on the air, but everybody's heard I promise you, everybody's heard his ads. Yep. He was down about, this was in 2008-9, he was down about what the market is, down about 50%. He'd been crushed. And he goes, am I ever going to get it back? And I said, well, yeah, you're going to get it back. It's going to take a while, and it took 5 years, right? But I said the more important question is, at your age, you're on the verge of retirement, should you be in such a volatile portfolio with absolutely no protection on the downside? And he was really pretty upset after that meeting. And but yeah, that's just 2 examples of many. I'll
throw out one or two ourselves. We had a gentleman who came in and sat down with us. We made some recommendations. This was in January of 2020, and he said, guys, I understand your proposal. I like it. It makes sense, but I'm just not ready to change my portfolio yet. I understand I'm taking a lot of risk, but I just want to, I want to keep riding. This was his exact quote. You remember it. I want to keep riding this Trump train as far as it'll go.
Yeah.
And that was in January of 2020. And so he said, I'll reach back out to you guys when I'm closer to retirement. And he was already close to retirement. And what happened in February 2020?
Well, you got to remember, that's right. In January 2020, things were bright and hunky-dory and looked like Trump could do no wrong. And then, boom, COVID hit.
COVID hit, and the markets didn't wait for him.
That's right.
Yeah. So that was one. Then, of course, we had the other that was a couple. They each more or less at one point had $1 million. You remember this couple too?
Right.
And she had invested hers well and had gotten up a bit above $1 million. He had invested essentially 100% of his investments in silver mines.
Right.
And that $1 million, by the time they came to us, was worth $250,000.
Yep.
There's pros and cons to diversification, but if you have 100% of your assets in something like precious metals, that's not a diversified portfolio.
No way.
Doug, that is all the time that we've got this weekend. So thank you for joining me here, and thank you out there for joining us. That's unfortunately all the time we've got this week. So we hope the rest of your weekend is everything you want it to be. This is Brice Payne along with Doug Ray. The show is The Wealth Guardians, helping you retire the job and keep the paycheck. And this is News Talk 94.5 WPTI. And this is 96.7 FM WTOB.